Welcome to the January 21st, 2019 Advance Report for McGowanGroup Asset Management clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with a fast-paced tour of the global financial markets. Thank you for joining me. Hopefully we will help increase your profits and good decisions in the year ahead. That's our mission, and I love this stuff. So let's dive right in, starting with the Dow Jones Industrial Average. Y'all heard about the mini panic of 2018. It's right here. Ooh, ouch. And look, Merry Christmas, investors. What reversed on the 24th? Well, the Federal Reserve did. It changed posture over the Christmas holiday, saying, whoa, maybe we went too far too fast because we're killing the markets around the world and global growth is slowing. Maybe we overdid it, and the Bloomberg probabilities for a rate increase, boom, for 2019 disappeared, and the possibility of a tiny cut for the short-term interest rates, which competes with high cash flow assets, that changed the picture, including dividend companies like the Dow Jones Industrial Average. So since then, we've had nearly a 3,000-point rally, popping over 24,500 this week, but we did establish a new low in this trading range. This was mid-2017, the first time we hit this level, and that may define the range going forward. Earnings reports are the key, and part of that reversal. Earnings reports are coming in, according to FactSet, about 11% higher than last year's earnings in the same quarter. And that's good news because the impact of tax reform, yes, helped earnings, but it also says these companies are beginning to take a deep breath after the mini panic of 2018. Now let's look at some asset classes that could be better bargains than even the Dow after the recent setback. That's the pipeline index. I was unaware that the pipeline index, those are primarily oil and gas pipelines, go back 23 years. That's 1996. You can see the impact of $10 a barrel oil in 1998. They tend to throw out the energy infrastructure, even though the cash returns are based on what flows through the pipe, more so than the price of oil or gas. You can see the rally afterwards. People piled in the energy complex when oil hit 140. That's $100 barrel oil. Notice a convincing new high after adjusting for 140 versus 100. It's not necessarily correlated, is what I'm trying to say. This is the crisis itself. This is $27 a barrel oil, and the pipelines get thrown out when people reduce energy allocations. But notice, we're priced for $30 barrel oil right now, and oil hit 53. These companies are making record profits and record cash flow at this point, and many of them are paying well over 8%. If the index were to catch back up to where it was the last time the companies were making this much money, well, they're actually making more money now, but this index is half price, paying about 8% on average. That could be one of the best inflation hedges for a portfolio that can accept reasonable price risk. This is the emerging market bond index. I would argue also at a bargain category. The last time it was this cheap was the credit freeze of 2016. It happened in about February of 16. Credit markets froze because commodities were down, oil was down, and they were worried about lots of bankruptcies, which turned out to be an artificial worry. Notice the gain potential here. That's the impact of the Fed tightening, which just ended. And you can see a gain here that is commensurate with the Dow, but this global high yield bond index also includes monthly income on top of that price movement. The other category that we're highlighting is global high yield for prudent investors that can tolerate some price risk but enjoy getting big checks over 7%. Global high yield bonds priced at an attractive discount to par values in many cases, giving us some nice gain potential on top of a good yield. And just for fun, it was bank earnings week essentially this week. So I wanted to highlight two blue chip names, a 20-year chart for Citigroup and a 20-year chart for JP Morgan. You can see the tech wreck back there. Then you can see the crisis of '08. Whoa, what happened here? JP Morgan goes to new highs. Jamie Dimon, one of the most respected executives on the planet at this point, and they hit a brand new high with distance. Ooh, what's this? That's Citigroup, and they would have to go about tenfold to provide a break even for these poor shareholders that bought way back here, because Citigroup was essentially bankrupted in the crisis and went on welfare. And this is the result. It has been an increase from the low point, but this is the difference between two blue chips, one managing their business well and another not managing their business as well, primarily with this crisis decline. So beware, just because you own a blue chip, you may not own the right blue chip. And we can help you. McGowanGroup Asset Management, come down to the Crescent, meet the team that cares, and we will draft an investment plan outline for you and your family with a target of 2025, 2030. We want to think ahead and look forward to large dividend and interest checks each and every month. I'm Spencer McGowan, your financial weatherman, president, McGowan Group. Thank you for joining us for this week's fast-paced tour. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.